Welcome back to Property Auction Hunters, and today it's going to be something really very special. You'll be joined by myself, Jay, Piotr, and we have a guest, Adam Lawrence, and this is going to be unbelievable. So if you're just joining us the first time you're on our channel, my name is Jay Howard. I was an auction manager for 7 years and a business development director for almost 2 years, and prior to that I ran a family trust where I handled £3.3 billion worth of real estate assets. I've done some amazing deals with my time. And moving on to Piotr. Piotr was a buying agent in London, got the knack for auctions, got addicted to it, and has been pumping it into his veins ever since. Absolutely loves it. And this man over here, we've got Adam Lawrence with us. I met Adam at a weekend event, and I was talking about auctions and exit strategy and underwriting, and I was throwing a whole load of these words just to kind of see who was in the room and how many people nodded back. And he was one of 3 people. They're all in a row. And they were the only ones at the end of my talk that were still going like, yeah, the Churchill dog. So I was like, there's nothing these guys, I haven't got any obscure knowledge to throw at them without these guys comprehending it instantly. And then what followed was a beautiful friendship where we started the Partners in Property London room, which is, and Adam will talk more about that, is an event that he holds nationwide. And then we've done a whole load of other things. Over COVID, we met once a week online and just chatted the breeze and talked about politics and economics and property. And what this man doesn't know, definitely my vote for Brain of Britain is Adam, who's with us. Adam, do you want to do a far better job at introducing yourself?
Oh, I don't know. I don't think I can keep up with what you guys have done, to be honest. I'm just a simple old-fashioned buy-to-let landlord to an extent, but I've taken that quite seriously, I suppose, probably a bit too seriously. Scaled quite a big portfolio. Got a group which has got over 625 properties in at the moment. Almost all of it has been done to hold on to stuff. I have ended up selling some assets in bits and bobs along the way as time, the market, debt, different views on places. I take quite a holistic view of areas and even whole regions of the UK and things like that, and tend to try and get in and get out over a much longer period of time, knowing that nothing is forever, I guess, but I definitely wouldn't call it trading. But yeah, and I've done a lot of my procurement through auction, which is what brings the 3 of us closer together, doesn't it?
It has done since the beginning.
Definitely. And also you run a group as well, because the Boardroom Club, called the Boardroom Club.
That's right. So my business partner and I, Rod Turner, we run a consultancy group, which is effectively us being non-exec directors in your business. And we meet once a month, usually virtually, although we do have 3 face-to-face meetups a year. Rod and I are only allowed out 3 times a year, so we have to be quite cautious with that. And we act as non-exec directors. We go all the way through a strategic plan, right from the top, all the way down to the nitty-gritty, and how you're actually going to do what you want to achieve over the next 12 months and beyond. You know, we have up to 15 people in the club at any one time. And we've had some wonderful people and still have got some wonderful people over the years, some of whom have been auction traders, as it goes, bridging lenders, people with trading businesses and property businesses, all sorts of stuff. Some landlords have just joined because they want a bit of pep in their step or a bit of a kick or whatever. Some developers, some exciting people. And we've had, my favourite comment of all time was, I won't say which training company because I'll try and remain as professional as possible, but someone rang me up and said, I really want to join. I was XYZ's developer of the year last year and I need to go to the next level. So I'd like to talk about joining Boardroom Club. And I was like, would you mind if I just frame that quote and then roll it out again and again? That would be lovely. So it's a real privilege to run things like that. And we also run 4 single day workshops a year, Rod and myself. We did one on the 1st of October and that was about exits. So auction obviously features in that a little bit, but it's from 2 angles really. One from you wanting to plan your exit, because all I seem to do all day is see people who haven't planned their exit, and realistically that's why I'm looking at their property, portfolio, business, etc. to dispose of. So they're well attended, get some really good people in there. They stand alone. It's not sort of you have to come to one to get the £50,000 one-to-one mentoring or anything like that. It is a real content-filled day. Most people complain that we've said too much in one day, but I feel that's probably That's
good
probably
thing.
a good thing to send them away. Lots to think about, you know.
Amazing. Well, one of the things I remember really well is like the Mastermind retreat within in Marbella with that was run by you and Fiona, and Ross Harper was there as well. So like that played a really pivotal role with how our business works right now. So it's the advice is.
And on the flip side of that, you were a dream client, because ultimately you came, you listened, you engaged, you participated, and then you did. And you executed, and look where we are now 5 years later. So you can't ask for more than that. It's the people who, it's the old shelf development, not self-development, that you want to avoid as much as you possibly can.
It's that bigger kind of one giant leap for mankind kind of, you can do all of this bit, but it's that kind of real stretch jump to go, well, I've got all of this now. Can I actually take the step to do it? And we're quite fortunate. We've got, obviously, the Buyers Club as a small community, similar numbers to your thing, and we have an application process, we have an interview, and we know at the point of the interview whether this is someone who's just going to sit in the background on the Zoom call with the mute on and the face covered up or whatever it is, and then you know the ones that are like, no, I'm only doing this because I really want to be buying and selling or trading or building a portfolio or trading or whatever it is. And of all the people that we interview, I would say maybe 50% make it through. I mean, I make it sound like we got 100 applications at a time. We don't push, as hard, because we've got good people. It's created a good community and a good environment, and that's as important as anything else for us at the moment.
100%. I think you've got to have people who are going to add value to the group. Otherwise, it ruins. It's the old one rotten apple can spoil a barrel, and that exactly works in mastermind groups, consultancy groups, things like that, buyers clubs. And from what I know, it's very well spoken of. I know you've had some great people through the doors. You get some great people through the doors, and ultimately, there's product at the end, isn't there?
Yeah,
and that's really what it boils down to. But keep doing what you guys are doing, I say.
But one thing that you've said that really kind of resonates, where you said, you see it every day, people who have failed to plan an exit. And essentially, 80% of the auction market is down to people who have failed to plan an exit. That's it. You strip all the trader stock out because they're planning that exit.
Well, actually, the traders probably got those properties because people failed to plan, and they got in touch with them, and
so
they
it's
didn't
probably
know
even higher.
It's yeah.
So this is our lives. I mean, it's one of the reasons why one of the first talks I did on at any property event or any networking event I was asked to come and speak to, was about exit strategy. You have to be aware of, and the amount of people that you speak to, landlords specifically, the old school landlords, been in it 20, 30 years, the thought of paying capital gains will have them rolling in the grave before they're even in there. Like, they're not even 1 foot in, they're terrified of it. And you're starting to see these landlords that were traditionally, I'm never going to sell, it's in the company, there's going to be no inheritance tax, it's very efficient, it's very streamlined. Now they're all seeing the current marketplace, the current legislation, the current conditions that they're facing. And a lot of them are like, well, I'm going to start selling. So, and it's that pig-headedness, if I can go so far, to say, actually, I'm never going to do this. Well, you never know. You don't know.
Never's a long time.
Never is a
Absolutely.
very long time, and none of us live for never.
Well, I think one of the things that came up when we did the workshop that people find interesting, the stat is 86% of second generation don't want to carry on the family business. Right, a huge, huge number. And of course, some of that is not a joke, because they've seen the pain. They've seen the hours, they've seen the obsession, they've seen some of that sort of stuff. And also, in reality, quite a few of those
have their own
enjoy
dreams.
the proceeds.
Yeah.
The proceeds are now there. So it's not the same as it was in the first generation, where they went through the relative austerity to build something that's worthwhile. And also, there's so much negativity out there if you want to find fear, it's very easy to, you don't have to Google the word fear on the internet, do you? Just open the media and you see it out there, especially about property. And landlords in particular.
So what's your view right now? Obviously, you're quite a big landlord. You've got a lot of properties, and there's a lot of talk of landlords wanting to sell and exiting the businesses and not wanting to do landlording anymore. What's your
So I
view
would say to any landlords listening to this, sell them all to me right now as quickly as possible. But in serious, I think you have to decide what you're going to do. So the first time I listened to George Osborne's budget speech in 2015, which was really the seminal point at which the tone turned hostile
Writing on
from
the
the
wall.
Conservative Party, the theoretical friend of the landlord. It went hostile. And I said, do you know what this says to me? It says go big or go home. And we're sort of 9+ years on from there. And the one thing that I got wrong was how long it would take for the current situation to unwind,
Right.
if you like. There's still only 6% of property in the UK is owned by a limited company. I find that a mind-blowing 6%. But it was only 3% a couple of, so it's doubled.
Yeah.
It's doubled its market share, but from a very, very low base. That was about 2020 when it was when
The
it was
other thing that's
3%.
interesting is the number of properties in the UK that have debt.
Oh yeah,
That's a tiny number.
people don't understand both owner-occupied and
Rented.
investment property that's unencumbered. Over half of what's owned outright to live in is unencumbered.
Yeah.
But then when you actually think about it, and there's all these sort of constructs of the evil landlord in the press and the media and things like that. That's old people, largely speaking. And then, of course, in the investment game, you've also got, number one, it doesn't mean the money's all come from property. They've made money somewhere and they've put money into property. Number two, there are religious reasons not to use debt. There's a broad number of property owning communities who don't use leverage for those reasons. So that's got to be borne in mind. And number three, if ultimately you've owned, average property turns over once every 22.7 years or something. Obviously that stat changes all the time, but we're roughly in that sort of mixer. Well, in 22.7 years, regardless of what the gurus will tell you, it's probably at least doubled in value. And if you've had a traditional approach, you've probably had a repayment mortgage. And in that 22.7 years, you've pretty much paid it off.
Yeah.
Which is why it's sitting there unencumbered. So there's lots of reasons for that. And I think we move in bubbles all the time, which is why I find that 6% so mind-blowing, because everyone I know buys stuff in a limited company. But it's funny when you look around and you can see certain streets and certain parts of the country that I know, and it's like, I know the 4 big landlords around here personally, and maybe we're one of them. We're a bit more nationwide and a bit more disparate than that. But I think the thing is, go big or go home. Going back to what Piotr said, go big or go home. Make a decision. And if you look at what I take my lead always in business from what big businesses do.
Hi, I'm Michael Alton. I'm the Commercial Director at Roma Finance, and I'm delighted to tell you that Roma Finance have the Flow Bridging range, which is specifically designed for those fast completions, which have come in handy when you're looking at purchasing a property at auction. If you want to know more, please don't hesitate to get in touch. Thank you.
And what big institutions do, because they've got more people than me, they're smarter than me, they spend loads more money on market research than I do. So why worry? Just
So how big is it big? Like, is 4 big? Is 20 big?
So
is 2,000 big?
when you define a portfolio landlord, from as far as the PRA are concerned, 4+ properties is a portfolio.
Yeah.
When you look at a housing association, 10,000 would be considered quite a small one. 100,000 would be considered one of the larger players. The biggest ones are sort of 200,000 plus, aren't they? So, and also people can get hung up with quantum in terms of number of what. So I talk a bit about numbers of units. I did it already when I did the intro, but normally because that's the question people ask me. But it shouldn't really matter. There will be people who own one property that is worth 20 times plus what my portfolio is worth. And it's one property. It might be sectioned into floors and wonderful stuff, and it might be right in the middle of central London. But there will be those. So they might have one unit, But if it's Euston Station or whatever, probably doing okay, So I think you should look at quantum in terms of size of assets. You've always got to look at loan to value of debt, because it's easier than it should be probably. And I've certainly met people who've got portfolios which are really pushing 90% loan to value or more because values have changed, because they've got private debt involved, because of all this other stuff. And it's like, well, that's incredibly risky. You can do it if you've got huge cash flow and certainty of that cash flow, but you need to be cautious. So, I mean, I think big needs to be enough so that you're not the only. You can operate quite a lot of assets on your own in this business, and people, when they start to grow up a bit, they start to outsource a few bits to a bookkeeper. They might use a virtual assistant, things like that. I'm talking about where you will have someone who is your asset manager, or someone who's got the responsibility. So only the very worst stuff swims uphill, like it does in any organisation. That would be my definition of big. When the Renters' Rights Bill was recently published in draft form, as it is at the moment recently, Granger was straight out of the blocks to say, we fully support what it says in the Renters' Rights Bill. You know, if you don't know them, big institution, listed company, started in Newcastle post-World War One, didn't they, buying terrace properties and have traded their way up effectively to be a massive listed company with some lovely properties, freeholds, airspace rights, all that
sell
kind of
a
stuff.
lot of properties in the auctions. You can see that tiny little thing by order of Granger PLC, and usually those are either
Regulated tenancies.
tenancy or post-regulated tenancy
Where the reg has
properties
passed away.
with vacant possession, but effectively you see that nothing's been done there for 20, 30, 50 years.
And it's funny, you see a lot of traditional housing association stock where it's got the lime cordial bathtub or the salmon pink bathtub, and you think, if this was a landlord in today, under the current kind of thing, you wouldn't get away with a bathroom or a kitchen like that. And it just shows actually the disparity between what these big housing associations are able to get away with versus what the common SME landlord is able to get away with.
There's definitely the word of the year, I think, is probably two-tier. And there's definitely a two-tier standard system. But then on the flip side of that, I was listening to someone from Peabody when I was up at the Labour Party conference fringe events the other week, and they've got about 110,000 units, and their average rent's £137 a week, and they've got a significant presence in London. And I just thought immediately, my commercial brain just thinks, how do you do that then? Where's the room for? How do you expand? If that's your rent, and they said
they're a charity, aren't they?
They're a not-for-profit, so you need to be careful with.
Slightly different.
I mean, they've got plenty of money in the bank for a charity, I'd say, or a not-for-profit. But they are a not-for-profit. But they also got some people who are on some very good wages inside the association, and a massive balance, very, very robust balance sheet. But if you want them and the likes of Peabody to expand, it's kind of difficult to think they can do that. They said they spent 80% of their rent roll on maintenance and management. 8-0. So it doesn't leave a lot, does it? It doesn't leave a big contribution. I suppose when you think about it, that's still £27 a week per unit and 108,000 units. So it's still a few quid. But how do you then get them from 100,000 to 200,000 if that's what you want to do? They delivered something like 1,300 units last year. So they delivered an increase of a little over 1% in their stock. That's not going to do what the government want the social and housing association sector to do.
Yeah, and some of the projects I actually lived in a estate in N7, and it was like close to the women's prison on Holloway Road. And basically that was closed and sold to Peabody. And that process been taking about 7 years, and they're going to build maybe 600 units there. And it's just like the amount of time it takes for a development to actually take place, even if it's public land, even if it's like well planned and Peabody's got great people to work on those things. Like the amount of time things take for development to rise up and be habitable, it's about 7
Well,
years.
that's the average. That's the average time of a build-to-rent development in the UK. Lifespan from cradle to completion, 7 years. So. You don't sort things out in one parliament, do you? Realistically.
Well, my experience, so I tried courting not just Granger, but Mountview, Pears, Peabody, etc., etc. And every time I made a contact where I'd spoken to them 2 or 3 times at Peabody, in the space of 2 or 3 months, new person. So there's a lot of churn in those businesses. And there's definitely something there where if someone's not staying 7 years to see a development through or a process through, and it keeps falling down, and someone has to come back and re-establish contact with everybody, see where things are, try and move it forward. 3 months later, they're gone, someone else is in. And you can kind of see, with just my own personal experience there, why things would take so long. And there's also massive inefficiencies in these things.
We like auction because we're impatient, right? So imagine waiting 7 years. I mean, how many levels of frustration will there be where you just think, oh my goodness, why are we worrying about this or that? I developed a listed building a while ago that, with the full support of the local authority, I couldn't say enough good things about the local authority. But because it was listed, you still got, in this case, it was the Georgian Society involved to make unreasonable requests about skirting boards that were put in the 1970s that added nothing to the building at all, or anything from the George. Not that they were faux Georgian skirts; they were just horrible things that needed replacing and going rotten. And it's things like that that make you think, well, do you know what? I don't really need to do that, and I probably won't do it again, even with the local authority 100% behind me, giving me grant funding, being brilliant with planning, unbelievable support. So that's just, I think, to an extent where you get in the UK system, our heritage comes at a cost.
Yeah.
And that cost is speed of delivery. And that then means people think, well, actually, why am I going to bother with this? And when I think of stuff that I've bought that's been developed and done, and they've done all the hard yards, and they're just sort of sick of it, they want to get out of the game, they haven't planned their exit, right? I just think, it's so nice that they've done all the work. All the EPCs are robust, everything's done. It's got 50 years plus life in this building, no problem. It's got a new roof, it's got all this stuff. You just think, now I can really assess this in the same way an institution would assess it, even if it's not a new build property.
Yeah, that's why I love properties like actually in the northeast of some parts of the UK. Like it's actually cheaper to buy them than actually build them from scratch, because that would cost probably twice as much as the property is worth on the market.
We've got properties in Scotland where they're 6 times as much to rebuild as they are to buy.
Wow.
6 times as much.
Wow.
And of course that has got worse in the time I've been doing this, because construction inflation has pretty much vastly outstripped, apart from insurance, any other form of inflation that there has been, including property values. Yeah. So it might have been that and the thing is, they were 50 grand 12 years ago, and you could rebuild them for 150. Now they're 50 grand still, and you can rebuild them for 300. So it just gets more and more out of reach.
How do you use auctions to grow? Can you give us some example of deals in the last month?
Yeah, well, it's a great time to ask, actually, because because of what we were
August
talking
was
about.
Quiet, is that what we're saying?
Well, what I'm saying is there's always situations where people are more scared of their own shadow than really being too calm and too factual. Part of the point you've got to remember is that no one can afford to. PRS is too big, nearly 5 million units. They can't just price it out of all existence. Huge pressure on anybody who isn't lucky enough to have an unencumbered property at the moment, because either they're going to drop off that mortgage rate at some point if they're lucky enough to still be holding on to one of those old fixed rates, or if a landlord is dropping off and when they drop off a mortgage term, it's usually an interest-only mortgage, so the pain is more pronounced. Yeah. Because it's not a repayment loan, so it's effectively doubling the cost of the debt for quite a few, or maybe even more if they remortgaged in 2019 or in 2021. When those drop off in 2026, there'll be some big changes for people, because the market adjusts, doesn't it, and rents go up, and they've absolutely rocketed. So look at that as the flip side of it. So I love auction because there's so much to it. There's so much to it. We could talk about pre-auction, at auction, post-auction, 3 fairly distinctly different markets that are obviously linked together in a way. And if you have got teams of people in certain areas, if you've got contractors you want to keep busy, we don't we don't have a construction company, we don't have a development company like that per se, but we have people we like to work with. And if they're shorter of work, they're going to be able to deliver something where, for Peabody, it'd be 50 grand. If you were going to go and do it in the evenings and you were a good plasterer and a good decorator and all the rest of it, you might get it done for 10 grand. We're going to be able to get it done for 18 grand. Whereas in the armchair, someone else is probably going to pay 30 or 35. So that creates value. And although those sums of money aren't huge, when you're looking at lower value stock, which a lot of ours is, because it's been a very deliberate strategy to do that, it's where your margin, it's where part of your margin can come from.
And you've got 10-20% of the value of the property.
Absolutely,
right?
Absolutely. And especially now where did we go with that? Well, we kind of lost that in 2022 and 2023 because construction inflation had gone so far. And then also people hadn't really woken up to the fact that the 23 market wasn't the same. Vendors take time to adjust. People don't move property quickly, which is why it's so fascinating to talk to traders about this sort of stuff. But then also they're quite slow off the mark when, for me, I was sitting there at the beginning of this year saying, we'll have a good year. Property prices will be up about 5%. I spend an inordinate amount of my time reading data and focusing on this sort of stuff. And all the chat was still Halifax felt like it's going to be down 4%. Nationwide is it's going to Zoopla are saying it's going to be down 2%. And I thought, you just misunderstood what inflation has done to this market in 2023 and late 2022, and you also have not got the right view on what's going to happen to the interest rate, in my opinion, which is only going to slowly move things along as it did last decade. So you've got 28-day or even quicker completion sometimes, so you know how to plan your resources around it when you've got people and things you want and need to move around. I like the idea of bringing units on a regular basis, because then you can bring the financing on and then you aren't necessarily exposed to a Liz Truss moment or similar thing like that. For those doing a sweepstake before time before I mention Liz Truss, that's the winner there. And I just think there's a lot of honesty there, but people make the mistake of thinking it's all transactional, whereas really there's people you want to try and build a relationship with as well, who work in the auction houses or who provide stock to the auction houses on a regular basis. So I think it's the best of all worlds, really. We've done deals where it's taken a year to complete. Great deal. Right, mostly because in that year the market did quite a lot of legwork as well, because we timed things quite well. But you don't really eat on deals you do once a year or that take 12 months in conveyancing. And if they fall over, if they're complex, tens of thousands of pounds in abortive costs.
That was my biggest frustration, because it's like if you spend 6 months, 12 months on the deal, you probably spend money on that deal as well, because it takes research, takes time, takes your effort not doing something else, and you kind of bet on the fact that solicitors will pull it together and actually do it, and sometimes it actually doesn't happen and you need to be willing to walk away. So like those private treaty transactions are a big frustration.
It's a headspace thing as well, right? Because while you're doing everything else that you're doing, it's taking up a corner. I need to chase this solicitor and I need to follow, and it's unnecessary. And one of the things that we love about auction is this is the auction date. From that, this is the completion date. You can, with that certainty, you can do everything and anything. You could even have it sold by the time you complete. You could have the value added by the time you complete. By the time you could do any number of things if you know what you're doing, but that certainty gives us so much breathing space. Because if we had to sit here and think, oh, we're going to do this deal, and we're going to do all of a sudden things will start falling by the wayside, because our systems are very much, these are the deals. Let's get them across the line. Let's get them out the door again as quickly as possible. Let's move on to the next bunch. Let's try and pipeline as much as we possibly can. And anything gets stuck in the pipeline, it starts to create blockages. And I think for a trading company, as we are, you can't have blockages in your pipeline.
No. And like you say, how do you build a business around something where you might take 12 months to get paid or not get paid at all? Very, very difficult. Whereas regularity, and then also I love the way seasonality gets introduced as well.
Bit,
because you see people are selling in August, they're probably pretty keen to get rid of it. Or they've just made a big strategic error. Some of the best stuff I've ever bought at auction has been in August. Some of the next best stuff has been in December.
Yeah.
Because people are packed up for the year and said, oh, well, I don't want to hold it empty over Christmas. Well, do you if you get an extra 10% off the price? Will that change your mind? You should do.
It should.
Do.
I mean, we've done quite well in October auctions as well, because actually there are people that are holding their money to pick up a bargain in December.
Oh, interesting.
Yeah.
I thought you were going to say it was because September's normally quite buoyant. This September's been different because of all this negativity that we've seen, but they kind of go a bit crazy in September, got back from summer holidays, want a project sort of thing, and then October they're kind of a little bit spent out a bit more, but that's interesting.
What I notice mostly is September isn't there's always expectations September is going to be a great month because people come back from holiday, but usually it isn't. It's October that is exciting because somehow there's no expectation on October, and then if there's no expectation, people actually come up with, I don't know how
they're there to do business a bit more than. Well, I know that you see from I look very closely at the sole subject to contract stats and also what's listed and stuff every week across the country, and you see a massive spike in the average listing price in September on the open market because a lot of central London properties go on right first back to school. focus now. Kids are out the way. Turns to, we want to sell the house and move.
Yeah.
So the average listing price this year from the end of August went up from something like 400k in 2 weeks to 490k in the UK. Wow. So a huge spike that is replicated every year and then calms down a bit. So once you understand some of these seasonal trends, there's no guarantee it's going to happen for that one lot that you want to look at, but you're putting yourself in a stronger position or not putting yourself in a weaker position, aren't you?
Yeah.
It's not gambling, but you kind of have to play the house rules, right? What are the ratios? What are the odds that you're playing against? Is it 49-51 or 52-48? And then you have to kind of look at some of the months and go, actually, I think that's a 48-52. That's in my favour. Or, a January auction is definitely not that level, but
I think I'm going to put a rare point of disagreement with you, because I think it is gambling to an extent, but I think you controlling its risk is what it is. Like any investment in anything, even if you only hold it for 5 minutes, is still taking a risk on something, isn't it? And it's pricing that risk, which is what you're talking about. And also it's about, and what people don't necessarily understand very well is variance. And that's a big thing in auction, in as much as, what do you want to do if you get involved in trading stuff? You want stuff with a big upside and a small downside. Brute force way to do that, buy everything for nearly next to nothing. Sure, nice and easy. Not that easy to do, right? But pick the lots and pick the auctions, as you guys know how to do, where you can place the lot there, or you're going to get a good lot position because you've got a relationship there or whatever, and then you're giving yourself the most upside you possibly can, aren't you? And that's absolutely part of the skill set.
I mean, that's our relationship with the clients that we work with, is we take that 52-48, and just by knowing the auction, knowing how to market, knowing how to position it, we turn that into a 60-40, where we're giving them, as we're playing, just incrementally increasing their odds of getting a really good price.
And that's a huge difference if you're ever going to do that 100 times.
Yeah.
Imagine a coin toss where you've got a 60% chance of winning versus a 52%.
Yeah.
It's drastic difference to your returns.
Yeah.
And like I say, can't guarantee it on one lot, but
as a spread.
As a lifetime's work, it's a pretty good idea.
Which is how traders think. Traders, if a trader looked deal by deal, there would be hangings off of bridges from traders who make a loss on one deal.
Yeah.
They don't. They go, right, okay, I'm selling 20 properties in this auction. I'm thinking of one human being specifically. I'm breaking even on like 8 or 10 of them.
Yeah.
I've absolutely shot the moon on 6 or 7.
Yeah.
And I've lost 10, 15 grand on the rest each.
Yeah.
But at the end of the year, when all is said and done, it's up and up.
Yeah. It's a diversified portfolio ultimately.
Yeah.
And of course, if you knew the 6 or 7 that were going to be dogs, you wouldn't buy them in the first place. No. But even the very experienced still have to.
But I mean, sometimes you still have to buy the dogs. If you know it's a dog, you still have to
keep
buy
the relationships
to
going,
keep the relationship going,
or
to even create the relationship, which is a hard thing to be able to do.
And also the same way you can't predict which ones are going to be the moonshots, right?
Yeah. No,
you just kind of know, but at the same time you don't know, and you just let them do its job.
Well, there was quite a big fuss once about a nuclear bunker that was up for sale this month. I'm sure you guys looked at that, and it didn't really do that well in the end. It wasn't very exciting at all. It was a bit flat.
Well,
and they obviously thought it might go,
I mean, the interior looked like it was a place where you'd get murdered, which is a wee bit of a turn off for me, actually.
I think there's a market out there for that, my friend.
I've got a lot of life to live, and I don't. It did look a bit Norman Batesy down there, so I don't think that did it any favours.
Niche, I think, is the correct marketing word.
We've actually on this channel reviewed a World War II bunker before.
Oh, we did, yes.
We did. Yeah, so they come up every once in a while, and there was one, I think. Never going to get it right. It's either Devon or Cornwall, but it's down that way. And they had one as well, and it got press on the BBC. And I think it was in the auction for like 15 or 25,000 pounds, like nothing. Like nobody thought this. It sold for like 100 and something thousand pounds.
Yeah.
And so it happens every once in a while. But that goes to Piot's point. You don't know when the moonshot is going to turn up.
You just need to have enough opportunities for those moonshots to happen.
Which is why you get some of these traders where there is no conversation about a deal to be done pre-auction. Because in their minds, even if the price that you offer pre-auction is higher than what it sells from the auction, they don't care. Because that could be the one out of the 20, or the one of the 6 out of the 20 that's going to moonshot.
Yeah.
And selling it to you beforehand reduces the potential of that happening.
That is interesting. I think if anybody's listening to this and thinking about dealing with traders, because we've dealt with traders a lot as well as dealing with auction, it kind of comes hand in hand to an extent. You know, you're up against them for, what's the bit, is it something that just is going to take a bit of time to sort out and they don't want to do it and they can't be bothered to do it? It might involve tenancy issues or things like that. Yeah. Or is your expected value different enough from theirs such that there's a deal there to be done and you're in the mixer together? So, but if they think, well, it'll probably get 110, but there's a 10% chance it'll get 200, that's how you build expected value, really. And that's for the calculation. They may not realise it, but that's the calculation they're doing in their head. And that's the art of the deal, if you will.
If you can get a trader who hasn't put it to auction yet or hasn't gone out to town on it, maybe just exchanged on it, and is thinking, actually, if I can back this to somebody, not deal with too much legal costs, don't have the stamp on my back, just get out of it, make 10, 15, 20 grand because I've got this other deal I'm trying to pick up. Sometimes it's timing.
Well, that's part of the skill where I struggle because I'm trying to look at inherent value of things and go for lower risk and more certainty.
Yeah.
And I then think sometimes, well, I therefore wouldn't necessarily, just because I think someone might buy it for more money, even though I'm pretty convinced it's not worth that money that I've got to pay, I wouldn't do the deal. That's not within my risk appetite. Whereas lots of traders are much, much better at that than I am and would just go, right, well, yeah, but okay, but some other mug's going to buy it. Yeah. And it's going to go really well. I know I'm going to get it in a lot too, and it's going to absolutely rock it. And, they're right more often than I am. So it's clear who's right and who's wrong.
A few of them do use the mug word. So that's industry lingo that we've just shared to the audience.
But it is amazing how the properties that are like none of us would buy them, like this 3 months lease, 3 months left on the lease flat in Leighton, like none of us would touch it, but it creates so much excitement, so much anticipation in people, and they're like get so excited about this. They pay 50k for something that 50k they could get 3 months in an Airbnb in Mayfair, and they choose to buy 3 months on a lease in Leighton. So I think spotting those things is important, but I don't think you can build a business around just that. It's just a nice kind of add-on to a trading, kind of proper trading business where you actually trade things of value. And then once in a while.
Well, the thing is that when there's opacity, the harder it is to value, the more advantage, the more experience to have. And the more risk that the retail buyers will put themselves at.
I mean, the bread and butter is still probatey, unloved properties that they bring to the market. That's the real skill of the trader. They bring properties to the market to put it in the face of a BRRR investor or a whatever, right? And that's their skill. So if you see a property where it doesn't say probate, but you can have a look in there and go, well, clearly no one lives there anymore. It's tired. It's been like that for years. I can go in there and turn that from a 3-bedroom semi to a 7-bedroom HMO. And, the value points there. It's the trader's understanding. Who is my ideal buyer? What is their price? What do they need to be buying it for in order to be able to pull out as much cash as possible? They pay attention to these things. They don't really comment or interact online or social media. For 90% of them don't anyway. But they know all of this chat. They know that there are people out there trying to do, no money left in or commercial property funding on a 8-bedroom HMO, sui generis or whatever. They know these people are out there. They know that's what they're looking for. So they package essentially those deals and say, well, here it is. This is the one you've been looking for. And they happen to be putting it into auction and saying it to 10,000 people. And now that's where the real game starts.
Well, that's it. There's a very small community of those guys and girls doing that, and a very big community of people who want to get stuck into their first project or their second project. And ultimately, you forget when you're in this world, most people can't buy a property even 5% lower than what it's worth in many ways. So if they end up with a 10% margin, not a margin that we would necessarily work to, especially if we were going to develop a deal, but they get 10%, it might be a great result for them.
Yeah, exactly.
So we're heading into 2025, we're in the last quarter of 2024. What are the 3 tips you would give to people in 2025 if they're looking to start in auctions, start trading, doing things like that? What are the 3 things you would
So,
tell them to watch
I mean,
out?
there's a banker here, isn't there, really? Number one, this is my product placement part. No, but where else do you go for information and learning? You know, read the book, listen to the channel, subscribe if you're not already subscribed. And then if you want to take the next step, I would recommend the Auction Buyers Club. I don't know anyone else who's doing what you guys are doing, and I know it's very well spoken of. So you can't put a price on. We're talking about dealing with assets here that you're probably going to pay 6 figures, maybe even 7 figures at auction for something. The price of educating yourself pales in comparison. Yeah. But that's got to be a double-edged street as well. They've got to put time in, and they've got to commit time as well as put some money in as well, realistically. So that's number one. That's the easy one, isn't it, really? Number 2, I would watch the sentiment and then decide. So I write a piece, as you guys know, on a Sunday morning.
Yeah, we'll link up to the Partners in Property blog where you post all
fantastic
the commentary.
Thank you, I appreciate that. And I also put it on my YouTube channel for those who don't want to read it, because sometimes it gets a bit heavy and it's better off in the ears. So there's also a recorded version. And I did a big piece in a recent one about Warren Buffett's quote that I'm a big fan of. Be fearful when others are greedy. Be greedy only when others are fearful. And a lot of people miss out the only, and they make him sound like a terrible capitalist sort of thing. And he's made a few quid, so he'd probably accept that charge, you know. But the point is, when everyone else is thinking it's time to go, we've got to get out, it's all over, just think, look, step back, look at the environment. How can it be? How can you can't lose the PRS. You've hurt it. It's a wounded animal. It's been shrinking. What's that left behind? A market where rents are rocketing at unbelievable speeds. You know, if you're looking to buy stuff in areas, then just look at, is there affordability there, and is there affordability growth there? And also, don't believe what you read in the press. Wages have gone up plenty. So of course rents have gone up plenty. And if it stacks up again, and things have started to stack up again, then you've got lots of stuff at your disposal. So I'd say that's number 2. Don't do the same thing as everybody. It's the old, what's the definition of insanity? Doing the same thing as everybody else, expecting a different result. So you can't do that. So you've got to use your brain on things like that. And I'd say, on a sort of similar vein in a way, look at things that other people aren't going to look at. I know you guys often review lots that are a bit quirky, you know, and it's really interesting to hear what everybody's thoughts are on things like that. But if you go in and it looks like it should be on Homes Under the Hammer, and actually they're waiting, Martin's over there in the corner, and the cameraman's hoping to sign you up at the end of the auction or whatever, you're gonna unlikely to be able to buy that and add lots of value to it, because someone's probably going to pay more than you, because it looks like an auction lot should look like. Yeah. So instead, look for stuff that probably shouldn't be in the auction at all. Right, and badly marketed at the high, it's probably the easiest thing for badly marketed stuff. And I think take that to another level and do your research early in an auction, because every auction you see, there's a couple of nice little bits of business done pre-auction, which I think first person in might well get it. Don't believe you won't get it pre, you know, but also work the room or the internet, work the catalogue post-auction as quickly as you can.
Yeah.
You know, so it's probably squeezed in a couple of extra tips there, but that's what I would be looking to do in 2025.
That's brilliant. Cool. Well, I think that leaves us with a lot of things to digest. And like we said, we're going to link up to your Partners in Property blog where you post Proponomics channel as well, where you post a lot of that information. And what else, Jay?
We just keep saying amazing things about Adam, the PIP community, and everything else. We'll just bang it all in there. Just
can't argue with any of that.
It's a ton of value. We're big fans of it personally. So yeah, hopefully people get the value from it as well.
Well, thank you for having me. It's been a pleasure.
Yeah, and brilliant. Thanks for coming, and good to have you in person rather than for the last 3 years. I think we always did live streams where everyone was sitting in their own space. So good to have you here in person. And thanks for coming.
Thank you.
Thank you.